those levels. Well, for more on all of that global market news, Andrew Barnett from LTG Gold Rock joins us now from Brisbane. Andrew, welcome to the program. We obviously saw that the Swiss Central Bank cutting further into negative territory, really a sort of theme that we're seeing across Europe at the moment. How much did that add to the big fall-off, the big sell-off that we saw overnight?
Hi Leanne, I hope you're well. Yeah, the Swedes put a cat amongst the pigeons when the markets opened in Europe yesterday, dropping rates to 0.5%. I think the market was fairly bearish anyway. The yen was rising, but certainly when they lowered rates further, they were at 0.35% under zero, and now they're at 0.5%. And I just think that at the moment, central banks are starting to lose control. Their monetary policy programs they're putting in place are not working. They're starting to panic. They're going to make mistakes. And we're seeing market turmoil in financial markets. We saw another big fall, obviously, in US markets. They recovered a little bit towards the end of the session, but I've just recently sent a note to my traders telling them to exit any long yen positions, because across my terminal I'm seeing more and more chatter about the Bank of Japan potentially about to intervene on its currency, making rate calls and calling banks and asking them, are they buying any yen? So at the moment we're certainly seeing a lot of volatility, but longer term I think we're going to see that continue to the downside. And of course our Aussie dollar at the moment, it's holding steady.
Well, speaking of the yen there, I mean, poor old Japan, because we're seeing that yen really rocketing higher. That's despite the latest moves by the Bank of Japan. So I guess there's a question there about whether, in fact, any further stimulus will have much impact on the yen.
I don't think it will. They haven't actually openly intervened on the currency since 2011, and they've done it a number of times through those previous years, and every single time they've done it, the markets come back and punish them. So when they do intervene, if they do, I anticipate it'll be very short-lived, as the interest rate dropped the other day, a couple of weeks ago on the Friday was, and the market will punish and push the yen back higher. And that's what I'm really concerned about. We're seeing global growth slowing. We've got very low inflation around the world, and the central banker's toolbox, of which they've got lots of tools, but effectively they're ineffective now. And I think Glenn Stevens may have alluded to this morning in Canberra when he said that central banks are being asked to do things that are simply impossible.
Yeah, it's a really good point you make there. I guess essentially losing control to some degree. Really what we're seeing from the US Fed as well, looks like they'll be cutting further into well, potentially cutting this rate as opposed to a hike. But they still believe really that if they push market or push rates lower, that could actually stabilise markets, which is probably not really going to be the case.
Well, the thing with Janet Yellen, she's been talking on Capitol Hill for the last couple of days, and she made a comment on Wednesday that was rather surprising to the market when she was asked about was the Fed considering putting interest rates below zero. She gave a fairly straight answer. She said, well, we don't actually know whether it's legal. We sort of tossed that one in the too hard basket when we talked about it at the last meeting. So will the Fed lower rates? Will that be their next move? It's certainly not their preferred move. They'd rather raise them, but I think it's fairly safe to say they're on hold for March and April at this stage.
Yeah.
But whether they can put them into zero, they don't even know if it's legal at this point, which again is causing more concern and uncertainty on markets.
Yeah, absolutely. What does this all mean for the Aussie dollar and I guess the New Zealand dollar as well? Do you think they're in danger of becoming safety plays as those yields decline?
Yeah. Well, they are, and normally what we would see in market uncertainty right now, stock markets falling pretty sharply. There's 41 stock indexes around the world now in bear market territory. We'd normally see the Aussie dollar and Kiwi dollar declining very sharply, but of course that was back in the days where interest rates around the world were fairly stable, and we had interest rates in other parts of the world similar to ours. But of course we have 2%, the Kiwis have a little bit higher, and if the markets continue to sell off, there's a real danger that the Aussie and Kiwi could become safe haven currencies, and that exacerbates Glenn Stevens' problem, because what all these central bank governors are trying to do is stimulate domestic growth and demand, and unfortunately it's just not working. So if we see more sell-off on stock markets, China's back from their New Year holiday next week, I anticipate they'll throw a few more cats amongst the pigeons, and if that happens then we could actually see the Aussie become that safe haven currency. It's the last thing that Glenn Stevens wants.
Yeah, absolutely. All right, Andrew, we're going to have to leave it there, but great to have you on. Thank you so much.
Thanks, Leanne. Have a great day.